What's going on, guys? Welcome to another video. We're going to be going over Amazon because they recently underwent a 20-for-1 stock split. I know Google is about to do that soon as well, but Amazon is sitting at a price point that I really love, which is around that $100 mark. And that's perfect for people with accounts like mine, like a few $10,000 to sell cash here puts. It's just a lot cheaper, less collateral needed, and overall, it's a great way to make passive income. So let's head over to the options chain. We're going to be selling a put because we're doing the wheel strategy on Amazon. And previously, you would need a six-figure portfolio in order to sell a single put. But the stock split allowed us to enter the wheel strategy at a much lower cost. So we're going to be going over to the options chain. Probably do something at June 24th expiration date. Head down to the strike prices, and we're going to be selling some put options on Amazon. So we want to be pretty safe. We don't know how far Amazon could potentially drop, just because the market's kind of shaky. Recession is here, and just stocks are at this big discount. But the best time to sell puts is when the market is at a big discount like this, because if the market happens to drop even further, then we'll be fine picking up shares of our selected stock at an even cheaper price and getting paid to do so. That's what happens when we sell a put option. We're collecting the premium upfront for the option to buy 100 shares at our selected strike price. So that's what you really want to look for when you're selling put options. You want to find a strike price that you're comfortable owning shares at if you do happen to get assigned shares, which is the worst case scenario selling put options, which is also why it's my favorite strategy. It's kind of a win-win situation. You either collect the premium upfront, option expires worthless if the stock price stays above your strike, or you take assignment of shares at your strike price and you still get paid premium. You get paid premium no matter what happens. Something like this is going to be a 113 strike price. It's going to give us an 80% chance of profit, 20 delta, and we're collecting $128 of premium for this. So this is going to allow us to collect quite a bit of money, and this is going to be about a 2-week expiration. It's June 8th right now, and it's going to give us a 2-week expiration date, so we can sell like 2 of these every single month, and that's going to mean we're collecting about $250 of premium every single month, assuming you have about $12,000 of collateral to put down for selling this put. So if you have a bigger account, you can sell multiple contracts, but this is really how people with a 5-figure account can really make a lot of money month over month, passive income, just by selling put options. And if you do get assigned shares, you can go right ahead and sell covered calls at a higher strike price. So that's what the wheel strategy is. You're selling put options until you get assigned, and then sell call options. And make sure you choose solid companies, solid stocks, and that would include stuff like Amazon, Apple, SPY, or even Google once they undergo their stock split. But Amazon looking really hot right now. Underwent a stock split last Monday, 20-for-1, and it's really popular right now just because of how appetizing the stock price is, as it has never done something like this before when Jeff Bezos was CEO. Thanks for watching.